You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Aisha Faredi, and the market has been choppy to say the best because we've been, toying around that green and the red zone throughout the trading session. Of course, there was an attempt made to go back to that 19,750 mark, but the latest news flow on ITC has resulted in a sell-off, and that has again put the pressure on the market. Kotak and Reliance, as it is, were dragging the index by almost 50 points. And now there's ITC as well, which is seeing a bit of sell-on news. So that stock too is trading in the red. What is holding out in the green is pharmas as well as auto space. So of course, a lot of auto earnings lined up this week. Today, TVS, etc. come out with their earnings. So we have TVS, M&M, Dr. Reddy's. These are some of the stocks which are holding up in the green. So that's the only space in the green. And what is also holding up in the green is the PSU banking index. The Nifty PSU banking index managed to hit a 12-year high on an intraday basis. So that remains interesting, and of course earnings galore, right from an HDFC AMC to a Dwarikesh Sugar to an SRF. Over the last 5 minutes itself, we've got a whole host of earnings. So that of course we'll have to track as well. That's the SRF number for you on the screen. But of course the biggest news maker of this afternoon is ITC.
It is ITC, and the kind of crack that you're seeing on ITC. Kunal, let's first get you in on ITC and not the index. We'll do that in just a bit. But this crack, do you buy the dip?
Well, not initially, but I would wait out for maybe another day because I think the stock has not found any major support even after this sell-off. So the first round of sell-off actually happened for ITC from 494, 495 levels. It moved up hard to I think 498, and then all of a sudden it went down to 478. And now the stock is at 470, which means at least another 8 to 10 rupees cool-off should happen to the stock price. I think closer to 460 could actually be a better zone to buy ITC, but not at current levels.
Andrew, do you track this one closely? ITC, any views on the demerger? Do you think factored in the price, or apart from this as well, multiple levers available for ITC to go to 500 now?
So I think you probably captured it last time with Nikon saying it's probably sell on the news is probably what the market's doing, and I think that was the same, to some extent with Reliance. You had the run up ahead of the news, it gets factored in. And there'll be more catalysts, I'm sure, in the future. But I think maybe one of the big catalysts for both these stocks in the very short term has probably played through the market prices in the run up to these announcements.
Okay, so that's a take coming in quickly. Let's take stock of the numbers coming in of SRF. Looks like it was a weak performance, at least on the chemical business, because the EBIT has come down to 460 crore versus 739 crore last year. So we are seeing a bit of a dip there. Actually, sorry, quarter on quarter, I beg your pardon, with respect to SRF. But then there are other numbers in terms of margins, which is coming at 21% versus 25%. There's other news flow on Craftsman Automation as well. There the profit has remained flat. HDFC AMC, Dwarikesh Sugar. Let's just pull up quickly all of these counters in terms of the intraday chart, because these stocks must be showing the intraday moves on account of the earnings. So HDFC AMC saw a bit of a perk up but cooled down. Let's see what Dwarikesh Sugar is doing, and some of the other names as well. Let's keep track of what's happening with respect to earnings as well. But back to the index and what's happening there. Nuresh, your sense as far as the Nifty is concerned today, it's very, very choppy to say the least. Do you think this 750 is becoming a bit of a congestion zone for the market?
So I think we need to get into a 300, 400 pointer range. A lot of heavyweights are done with the results. The price action is done. And triggers for a quick move are out for now. And by end of this expiry, 70% of the Nifty weights would be done with the results. So expectation is 19,600 to 500 on the downside, 20,000 on the upside becomes a resistance. And in this period, you keep seeing stock-specific action based on results, which would continue for the next 1 week, 1 to 2 weeks, where majority of the results should get done in terms of the heavyweights. So overall, time for consolidation mode on the Nifty and stock-specific action based on results and any other announcements in the large caps.
ITC, considering that's the one which is the biggest news break. And remember, we told you first that the demerger announcement is going to come in. It's going to come in before the AGM next month. In fact, let's hear out Nikunj's take on the same.
The stock has seen a vertical run-up in anticipation that the demerger will happen. The demerger has happened. But now let's look at the reality of the demerger, which is you look at ITC as a sum of part. What is sum of part? 4 businesses, every business has a derived value. And how do you summarize it? So on sum of part, the hotel business in the aggregate picture of ITC is not even 25 rupees. Now that's a cigarette business, valuation 2.9 lakh crore, other FMCG business 1.7 lakh crore, agri business 670,000 crore. Let's bring it down even more to the hotel business, which is what you want to look at. If you look at the hotel business, it is 25,000 crore. That means it will be a sum of part of about 25 to 30 rupees. 25 to 30 rupees for a franchise like ITC, even if you get an independent share by end of the year and it just moves independently of what is happening in the hotel industry, it could trade between 25 to 40, 40 to 45 depending on the year and the market condition. But the stock had seen a run up of more than 5 to 10% in last 1 month in anticipation of that. So while what is happening is great, while what is happening is good, minority shareholders should be happy and excited about it because you're going to be getting a world quality business. But ultimately the value of that business in the medium term will not be more than 25 to 50 rupees. If that is the case, then that kind of adjustment in the stock had already happened in run up to the news, and that is what is getting adjusted. In the short shareholder markets are a function of news, buzz, activity, khabar, and also the real assessment of what the true value of the business is. 25 to 40 rupees is the true value of the business, while markets will welcome this move.
Okay, so that's a true value that the analysts are pegging for the hotel business. But do remember, we spoke with the management and this is something that they've already indicated that they're looking at various constructs of unlocking value when it comes to the hotel business. Let's listen in to what Mr. Puri told us.
The hotel industry boom like never before, occupancy rates like never before. Sanjeev Puri has said at the AGM that we will divest the hotel business at the right time. And when there is a boom time, it's always a good time to divest. Why don't you divest now, sir?
First of all, let me first say that I didn't use the word divest. I said alternate structure.
Okay.
We are not exiting the business,
Okay.
right? Because it is important for us also from a synergy perspective. There's a lot of synergy between foods and hotels, for example, right? So we are saying we will look at an alternate structure. We held it back during COVID period. Once the COVID is over, we have said that it is back on the table in line with industry recovery dynamic. And some time back on a similar question, I had said, yes, industry has recovered, so it is very much on the table and it will be taken forward maybe in a couple of quarters and things like that. So it is very much on the table. And let me also tell you that besides the synergy, let me also say that while the hotel industry is doing well, I think the opportunity in India in tourism is immense. Economic multipliers are immense, and for the first time, the Honorable Finance Minister in the budget brought out a very clear vision, very powerful vision of creating 50 centers of excellence. I think and that is fundamentally because there is a huge potential, huge economic multiplier, and so we want to scale up. And that is why we have adopted an asset right strategy, combination of management contracts and whatever assets we are building will help us grow faster. And we are adding almost one hotel a month.
But Mr. Puri, 2019, when you mentioned the fact that you are looking at creating alternative structure, not divesting the hotel business, the lay of the land was different. The capital requirement was different. FMCG cash flows were different. Could there be a case that you may not consider creating an alternative structure for the hotel at all? Because the things have changed after when you spoke about it first versus now.
So our strategy for hotels has not changed.
Okay.
When I spoke about it, I spoke about asset right in first time in 2017.
Yes.
And we are staying the course. Whenever you look at how you organize yourself, you have to look at your business strategy and look at the pros and cons of the alternate structures that you have got. And our position is the same as what it was earlier. With the asset right strategy, I think an alternate structure is best for creating sustained value, and we will create an institutional mechanism to make sure that we continue to leverage the power of synergy.
Mom?
Back with closing trades right here on ET now. Let's just revisit what the closing trades are settling in at. And it's been a choppy ride for us. To start off the day, it was Reliance, as was the case on Friday as well. A couple of these banking names. And right now it's ITC. So those are your key pressure points in trade. Kotak Bank, incidentally, is still lower in trade, hasn't seen a marked recovery or a meaningful recovery by any standards. In fact, if nothing, it's pretty much around the session lows, down 3.5% still as we speak. And same is the case with Reliance. A smidge of a recovery, but that also got sold into intraday. That stock lower by about 2% as we speak right now. TVS Motors numbers are in front of you, and at least the top line is looking optically pretty much in line with the estimates. I don't know what merits that significant drop or a sharp drop in the numbers. We will wait by for more numbers to trickle in. Maybe we can get in Shrishti and get in more analysis on those numbers if we can. But Andrew, what is it that you made of the private banking names? I'm wondering what's the disappointment with Kotak Bank's numbers. The numbers were good. Wonder why the stock has fallen though today.
I think from the analyst reports that I've seen and from the commentary from the conference call, the results conference call, I think there's still a bit of nervousness over the cost of deposits and how that's going to affect interest margins going forward. So I think that's one of the key concerns. And of course, the ongoing concern is what next after Uday Kotak and how that's going to play out. So I think that's the only two reasons I've seen, and I think it'll probably continue to kind of concern the market in the very short term, in terms of the pressures on the business as well as the senior management. So I think that's what's probably bothering the stock at the moment in the very short term.
Let me just quickly run you through the other details on TVS Motors. But as we were pointing out, there's no reason for a disappointment on that stock. Maybe it's just the run-up which is seeing a bit of an impact. Because if you look at the bottom line, the 470 crore which has come in terms of the profit is ahead of what the street was expecting. Even on the margin front, they have managed to report a better number. It is 10.6%. And the company says in their release that this is better than 10% that they reported last quarter itself. So there has been an improvement of 60 basis points on a sequential basis. The profit before tax is up a solid 41%. It stands at around 610 crores. In terms of the volumes, of course, we knew the data already. The total volumes in this quarter is around 953 with respect to the two-wheelers as compared to 907. And the scooters as well has been pointed out in terms of, and of course, these are in thousands, 9,53,000 in terms of the total units that have been sold in Q1. And this includes around 38,000 of the EV units as well. But overall, there's no reason of a disappointment. The profitability is up 46% year on year. The top line is higher by 20%. The commentary doesn't seem anything that warrants a downtick on the stock, because overall they're saying the overall two-wheeler and three-wheeler sales, including exports, grew by around 5%. They're also saying that the electric vehicle sale has been quite strong. So no reason, but maybe the fact that the stock was already in the green before the earnings were setting in. Maybe that's the only reason. We'll wait back for more details as well as TVS Motors is concerned. But quickly, Naresh, a chart check on TVS Motors. What would be your recommendation?
So the case is the stock has outperformed meaningfully over the last months and years. In the near term, if you look at the last 2 months, it has been stalling around that 1370 mark. And on the lower end, 1290. So till the time it is in this range, it could continue. A break below 1290 would be an indication of a short-term top being in place, and it could correct.
No, I think the sector's still ripe for more growth, and I think, but I think in the short term I'd probably play it through the component side, the auto component side, rather than the two-wheelers. I still think EV's got some way to play here. And I think, my concern is that I'm not sure which one is going to be. I think they're all probably going to be winners in some respects, but I'm not sure who's going to be the key winner. If you say the US, you could quite easily say Tesla is going to be there because of all the the breaking groundwork it's done in terms of getting to the position where they are. But I think in India we're still on that open playing field when I'm not quite sure who's going to be emerging as the winner. So I'd rather play it through the component side at this moment.
Kunal, do you also believe that in the near term, perhaps auto stocks may have peaked out or not quite?
Not really. I believe I'm still extremely bullish on the auto pack. I still believe that there is a lot of room on the upside for these auto stocks. Look at the charts for Hero MotoCorp, Bajaj Auto, even Tata Motors to a large extent. These stocks have gone sideways already in the last 1-2 weeks in terms of price action. But then when you look at the leadership, so very rarely do we find that when a sector gets 2-3 strong leaders, that the sector tends to underperform for a larger period of time. Tata Motors has been one of the outperforming stock. You've seen Bajaj Auto also making fresh highs for itself in this last 3-4 months of very strong price action. M&M has been an exceptional chart right from 2022 when the stock managed to break out that 700, 720 odd barrier or resistance for itself. So I think when you have 2-3 such kind of strong leaders, the sector goes in for a much more stronger confidence up move. And I believe that there are no signs where the larger cap names or the performing stocks have entered into any kind of a froth or any kind of an overbought territory for themselves. So in that kind of a scenario, I would expect that this trend should continue on the upside for many of these auto names. I would in fact actually expect that as a pack, many of the auto stocks could rise up by at least another 10 to 15% in the next 3 to 6 months. So traders who have been bullish on the stock earlier, they just have to extend their time horizon from very, very short term to now 3 to 6 months to garner that extra potential return of 10 to 15% plus.
Okay, point taken. So there's more upside available for some of these auto names. But just pull up the intraday chart of PNB Housing as well. Of course, that too was a result candidate. There was a 48% growth in terms of the profitability on a year-on-year basis. The revenue jumped up by almost 21%. And this is despite total cost also getting higher by around 15%, and the other income fell by 90%. So overall, the numbers from PNB Housing Finance was also quite strong, and that's why we are seeing an uptick on this one. In fact, not just PNB Housing, a whole host of financial earnings came today, right from the banking names as well. So let's go across to Kunal to check in terms of the other the chart checks for these as well. PNB Housing as well as Canara Bank. That was the other one that came today.
Yeah, Canara Bank also is one of the attractive charts. In fact, I've been very bullish on the PSU banking lot, and I strongly believe that these stocks have just started a cusp of a second leg of a breakout. So we try to measure that in terms of the time-wise rally, the time-wise consolidation, the price-wise rally these stocks have shown. And I think many of these PSU banking stocks are actually getting into the second phase of a major breakout for themselves. So I think it's now a matter of patience as well as time for these PSU banking stocks. They may look overbought in a shorter term time frame, but then when you look at this in the next 6 months to 1 year kind of a time span, I would believe that these stocks should be significantly higher from where they are currently. PNB Housing could be an exceptional chart because I think at 680 plus levels where it's trading, it's already confirmed a fresh multi-week, multi-month breakout. In fact, this could be one of the best closing the stock has seen in the last, I think, 2 years or plus for itself. Again, the last 3 to 4 months has been nothing short of exceptional for PNB Housing, from 375 or 400 where this move started off for PNB Housing to now 680 plus levels on the verge of breaking 700. This is a strong and exceptional move.
Right. Okay. Andrew, on that note, we're going to let you go. Thanks as always for taking the time out and joining in. Let's quickly get in some closing ideas before we chat with Samvardhana Motherson Management as well. Kunal, what's on your radar?
So Sun TV is something which looks attractive to me on the charts. Now trading at 540, we flagged this earlier, sub 500 levels. Would look to be very bullish on the stock and look to trade at current levels.
Right. Naresh, what about your strategies?
So that would be NTPC, which looks interesting, 2 rupees away from a 52-week high.
Just wanted to flag out not just the PSU banking names, the entire PSU basket itself is doing quite well. Apart from banks, it's power space as well, which is seeing quite a bit of traction. SJVN, NHPC, PFC, REC, pick up any of these names. They are quite excited in the trading session. And of course, the other defense names, the likes of BML, the railway stocks, rights, etc. Everything is doing quite well. So the PSU space as a whole is seeing quite a bit of re-rating. But within the power stocks itself, Naresh, do you have a preference? These hydro names, SJVN, NHPC, and even the financiers, REC, PFC?
So REC, PFC have already made a move, but NHPC still looks interesting. The stock has given a range breakout, headed towards a move towards 60 levels. NTPC could be the next one, which is the largest one, just 2 rupees away from an all-time high. SJVN could be on dips, but NHPC looks the best one at current prices, and the next one would be NTPC. And overall, the trend is very positive across the board for these names. So one by one, we could see one NHPC and NTPC do well. The smaller names like Inox Wind, etc. have also done well. So time to look at the ones which have not.
Right. Let's welcome on board Kunal Malani, the CFO, and Lakshmanan Sehgal from Samvardhana Motherson Limited joining in on the show right now. Kunal, if I could start off with you first. It's your second biggest acquisition in a month's time. Can you walk us through the rationale behind this, and what does Schneider add to your portfolio?
Yeah. So firstly, I think this is another acquisition that highlights the trust that customers have on us. This, as you know, is an asset not doing too well. It's gone through its administration route right now. It is actually a loss-making asset as it stands, and the customer picked us again to consider us as the solution which can make this asset profitable going forward. The customer is backing us on variety of different forms on this, both from being able to give us support on the pricing front as well as on future restructuring that this asset may need to undertake. So we do expect that this would be profitable business going forward. It should be EPS accretive going forward, and it should certainly be even ROCE accretive from next year onwards.
Right. So by when do you see the business to be profitable and EPS accretive?
Oh, at the point of acquisition itself. We've obviously worked with the customers to get the support from the start of the acquisition or from the closing of the acquisition. And hence it should be EPS accretive from day one itself. Obviously, there's a lot of hard work to be done to make sure the operations are stable, to make sure that the material reaches the customer's end at time. So a lot of operational stuff to be done, but with the support of the customer, this should be profitable business from day one.
Okay, so profitable from day one itself, but the total enterprise value of this business is pegged at 118 million euros. Could you break it down for us in terms of how much debt would you be undertaking, and overall with respect to funding of this acquisition, what's the plan?
So actually, enterprise value of 118 million odd euros, out of which the equity check is expected to be somewhere between 70 to 80 million euros. The rest is 20 million of financial debt is the max that we see, possibly be a lower number. The rest, there are a fair amount of adjustments to be had on account of either debt-like items or some employee liabilities and so on. So hence an actual payout of not more than 70 to 80 million is the way we see it.
Okay, and you did hint about various synergies that will come, but any more client addition that will become easier on account of this acquisition, and what are the cross-selling opportunities?
New customers, no, but these are all existing customers. As I said, this has all been supported by the customer, and hence we do not expect anything incremental to come from new customer base per se. What it does do is obviously add a completely new product portfolio for what it does. It carries with it some 200 patents, 250 odd engineers which are focused on developing these innovative parts. These are, mind you, good decorative parts or aesthetic parts that are going into high-end vehicles. And hence it again, cements our positioning in the premium end of the market. It's also currently focused more on the European side within our fold. It obviously can access markets across the globe, and with its technologies and IPs that it carries, we should be able to penetrate many other parts of the world under the Motherson portfolio. In addition, I think the customers, as I said, having supported us, we do see them being able to support us in other parts of the globe as well. And hence, we should be able to grow this business going forward.
Right. So post the recently announced acquisitions, where could the company's debt levels stand at, and how many more such acquisitions you think are in the works or under consideration?
Look, I think the total acquisition pie so far would be somewhere in the 500 million euros. Mind you, carry with it its own set of profitability pieces to it. And hence, at an overall level, while the absolute debt will go up, the leverage ratio or the net debt to EBITDA should largely be, give or take, less than 2x. Hopefully, by the end of the year, closer to where we are at the beginning of the year.
Right. The global light vehicles, the analyzed selling rate, as we understand, rose to about 89 million units per year in the month of May, posting a consistent, month-on-month improvement as well. Has this number been improving? What's your observation?
Look, as we've always said, we remain positive on the industry, not only from volume front, but also from premiumization front. On the volume front, in spite of all the recessionary headwinds in the developed world, the market still remains, 15-20% below pre-COVID levels. And that implies there is a base that exists below which it is unlikely to go. So downside seems limited, upside potential seems higher, and hence we do expect the growth to continue, maybe at a slower pace, but we do expect growth to continue on the volume front as well.
Okay, and just before I let you go, last 4 years were rather tough for Motherson Sumi, or SAMIL as we call it now, but we have started to see signs of improvement. Analysts are in fact now expecting that the EBITDA could perhaps double and EPS could triple by FY26. Do you think these are realistic numbers and expectations?
Can't really talk about forward-looking aspects, but look, I think as we've said in the previous quarter as well, the worst seems behind us. Some of the new normals in this environment is priced in now, and hence as things become more stable, as supply chain becomes more stable, some of the working capital expanded situations will start normalizing as well. Some of the acquisitions will start playing out over the next, as these guys closed and over the next 2 odd years. So I think all in all, we are looking forward to a journey to 36. And in that journey, obviously, the existing house has to deliver in order to meet that journey. So we remain geared up towards getting it done and towards the 40% ROC, which is our target by 2025.
Thanks, Sonal, for that. We did try to get some more near-term targets from you, but nonetheless, we'll take that long-term target that you're giving us. Thank you so much for joining us. But in the meantime, pull up the intraday chart of Mahindra Logistics, because that company just reported its earnings and they're looking rather bleak. The net loss has actually expanded for the company. It's now close to about 8.5 crore rupees. And of course, this is as the revenue has missed expectations. It's around 1,290 crores. And that's the reason you are seeing a bigger loss than what the street expected. Street was working with an estimate that maybe the loss figure is going to be 2 to 4 crores. No, that's not the case. It's much larger than that, and that's why you're seeing a negative reaction coming in from Mahindra Logistics. Stock seeing a cut of almost 3%. But on that note, we'll take a very short break. Don't go anywhere. Welcome back. Still continues to be very, very choppy, and in fact the market has taken a bit of a nosedive. We are below the mark of 19,700 yet again at the lowest point of the trading session, and understandably we are choppy because there are a whole host of cues really lined up. Of course, for our own markets there was 15-16 Nifty companies which are reporting numbers this week, so we are watching out of all of that. You have global tech earnings as well, right from Meta, etc. So we'll have to wait by to get a cue from there as well. And 13 central bank action, not to forget, of course, the US Fed. That will pretty much decide whether the 25 basis point hike this time around would be last or not. So lots of cues really lined up, and that's the reason the markets have decided to be a lot more choppy as far as the markets go. And of course, in terms of the earnings as well, back home it's been fairly mixed in terms of the report card of the earnings that we have got recently. So all of that playing spoil sport for the market at this point of time. But let's try and understand what's the latest agenda as far as the GST meeting is concerned, because there's been a lot of to and fro with respect to the online gaming, whether that 28% GST rate that they applied will get a rethink or a reconsideration or not. Let's go across to my colleague Prakash to understand, because the initial thought suggests that there would be no rethinking or reconsidering that, which means that 28% is here to stay. But Prakash, tell us more details.
The Finance Ministry sources are informing that there is no rethinking on 28% GST on online gaming, the decision that was taken by the GST Council in its last meeting. We are given to understand that the Finance Ministry is not in favor of holding yet another round of consultation with the industry on this particular issue, as proper consultation has already been made by 2 GOM constituted by GST Council before arriving on this decision. Therefore, charging 28% GST on full face value is something which was decided by the GST Council unanimously. The only thing that the Finance Ministry may discuss at this point of time is about the implementation of this decision. We are learning from our sources that the Finance Ministry is open to discuss about the structure as to how this decision would be implemented going forward. When it comes to the issue that was raised by industry about the probability of growing illegal or fake platforms due to this decision, sources are informing that there is proper system in place to identify and track such illegal platforms. One important aspect that the sources are trying to emphasize is about the 28% GST. Sources are informing that 28% GST would only be applicable in a case where money is received, but it is still at 18% where money is not being received by player. So they don't see much impact on online gaming sector as being anticipated by industry. Sources are also informing that the government is planning to bring proposed amendment in current GST Act during current session of Parliament.
Right, let's welcome on board Mayuresh Joshi as well and find out what he's making of the market right now. Mayuresh, just want to discuss ITC with you, and how is it that you're looking at the hotel's demerger news? Was well known in the market. We reported it as well that something like this was in the offing. And now the way the street is actually reacting to, this particular news, almost like a sell on news kind of story.
Afternoon, Aisha. Oh, absolutely. I think a lot of market participants were anticipating this part of the news. And therefore, I think once the news is probably out, you're seeing some element of profit booking happening on that counter. The other bit with the news itself, a large element of what the news probably exhibits is that ITC will hold 40% in the hotel business itself. So the hotel business will become effectively an associate company for ITC. And since 60% of the hotel business will be held by minority shareholders, there will be some element of an holding company discount. Now that can tune to anywhere between 20 to 40 or 50% depending on how analysts are probably viewing that. And that is one more reason why the stock is probably down. So I think both in the news as well as the expectations in terms of being held by 40% by the parent company itself, entailing a holding company discount for minority shareholders.
Interestingly, let's just bring up the stock prices for a PFC REC. They're at an all-time high. Just looking at the price action as to how these stocks have panned out in the last 1 year, PFC is actually held out by about 103% and REC has given a traction of about almost 71%. In fact, let me take it across to Vamakshi and find out why these stocks are abuzz.
Well, yes, PFC as well as REC, both these power financiers are perched at an all-time high today. We have a couple of updates that have come from these counters. Let's first look at the update that came in from PFC. They have signed an MOU worth almost 2.37 lakh crore with nearly 20 companies in the clean energy space, and this is for setting up solar, wind, green hydrogen, battery storage, EV, green energy equipment. Now, the companies that are included in the MOU include Adani, Greenco, Renew and the likes. REC, as far as that counter is concerned, that has gone ahead and given financial assistance of nearly 50,000 crores to SJVN. Other than that, a board meeting is also expected to happen on July 26th in order to consider a proposal for fundraising as well as to consider declaration of dividend. So those were the updates that came in for both these counters, but there are a lot of triggers lined up ahead for these. Macro stability, the Government of India's thrust, strengthening balance sheet of power value chain participants present a robust lending opportunity. In fact, the planned power sector capex is expected to create a financing opportunity of almost 98,000 crores by FY30 is what analysts are expecting, and both these companies are well positioned in order to take advantage of this kind of opportunity. Not just that, the asset quality has also seen a marked improvement. When we talk about REC, GNPA peaked in FY19 standing at 7.24%, and since then it has dropped to lows of almost 3.42% in FY23. Similar trend is being seen for our PFC as well, with the GNPA at 3.9% in FY23, which is in fact at a 6-year low, and that was on the back of asset resolution of nearly 17,100 crores seen from FY20 to FY23. Not just that, the valuations for these counters appear to be quite reasonable, with the price to book for PFC at 0.7 0.76 times, while the price to book for REC is at 0.79 times, which is quite reasonable as compared to some of its peers. So largely on the back of that update from these counters, some of the triggers that are lined up ahead, watch out for PFC as well as REC.
Yes, watching for PFC and REC, and also watching out for relaxer footwears, because the numbers look quite decent actually. It's a good set coming in. The revenue is up almost 10% on a year-on-year basis. The profitability has jumped 44%, and that's because the margins have improved by almost 200 basis points. So that's why we are seeing a reaction on that one as well. But just coming back to power, Mayuresh, your thoughts as well as the power stocks are concerned, SGV and NHPC, and even the financiers that my colleague was talking about, REC, PFC?
Afternoon, Anisha. I think they're in fine fettle for all the reasons that Mamachi mentioned. I think asset quality pressures, both for PFC, REC, have come off quite significantly. I think the kind of recognition that has probably happened over the past few quarters has been quite substantial on the balance sheet. And again, I think the state dues that are probably coming off entails a lot of stress that comes off their balance sheet as well. Along with asset quality pressures coming off, with payments coming on time, I think a lot of working capital requirements and cash flows also remain strong. To top it up, you look at the dividend yields that both these stocks are giving. Valuations are extremely attractive at this juncture. PFC is giving a dividend yield of 5.5%, REC 7%, which gives an additional amount of flavor for this stock as well. So I think the momentum might continue. For the producers itself, I think stocks like SJVN as an example, I think the new plants which will get commissioned will definitely add on to the volumes. There had been intermittent delays in terms of cost overruns over the last few years. But somewhere I think with more commissioning expected to take place, I think leverage will probably play out on its balance sheet as well. We do pull this stock onto our global focus list as well.
Okay, that's Mayuresh's view coming in on what he's making of some of the power sector stories. Let me quickly take it across to Sharad as well, find out what the dealing room chatter is this afternoon.
Well, yes, in focus we are having CAMS, and what we are hearing from the dealers is there is a buying coming in from the HNI counters, and importantly the volumes have also risen by almost 2 times its 20-day average. The stock itself hitting its 8-month high levels, and the key domestic investors include UTI Mutual Fund, LIC as well as private equity fund from IFL. Now looking at the stock itself, it's down 12% from 2022 highs itself. And recently there was a management's meet in Singapore, and they stated that the domestic mutual funds AUM business is expected to go at a long-term growth rate of 20%. Apart from this, the company has also maintained its guidance of a 40% EBITDA margins going ahead, especially an upward trajectory expected over the next 4 to 6 quarters. And lastly, however, on the opposite side, Equirus came out with a note recently, and they stated that there is still a consistent pressure coming on the yields due to structural regions for the share transfer agent companies, which includes CAMS.
Okay, so watching out for CAMS, but mixed feelings separately about Larry going away as far as Twitter is concerned. The bird Larry going away now, X, very mixed feelings about it.
Very weird feelings. It doesn't look like Twitter only.
Yeah, it doesn't look like Twitter
I'm wondering, are you going to say I X'd right now? I X'd on this? What are you going to say?
I don't know. Yeah, like it just seems. I just hope this is a temporary thing and not permanent, because I don't think I've been able to kind of make peace with that X coming on the screen with respect to Twitter. What about you?
Yeah, I think it's difficult to digest.
I
X'd my views. That is my bigger concern. It's fine. I can deal with the logo.
The platform is still called Twitter. It wasn't called Larry, right? The bird's name was Larry, so it wasn't called Larry. It was called Twitter. So I think the name of the thing is still going to be Twitter, and you'll still tweet. But the fact that it's X and it's just, it's very, very weird.
The bird tweets.
Yeah, that's also true.
That's where it came from.
Yeah, but very weird. Mayuresh, you use Twitter a lot as well. Your thoughts? I don't know who is liking this. That's my question. Is there anyone who likes it?
No, I don't think so. I think there has been a lot of resentment, and you're right in saying that. And Aisha is absolutely right. I think Twitter was supposed to be about tweets.
Yeah.
Yeah, we can go on debating about all these changes. It's like someone saw Threads the other day and said, what's this @ symbol? so much is happening right now.
That's true.
Yeah.
Just too
It's
much
difficult
news
to
flow.
keep up with it. But let's take it across to Vinny. She's the one who actually broke the news and kept up with it way before it actually came out. And reported in ITC, which is now confirmed that they are looking at a demerger of the hotel business. But what could be the possible ratio? Vinny, what are you picking up?
So absolutely, one, they've gotten an in-principle approval from the board for this demerger of the hotel business, and what they've said is that ITC is to hold 40% in the demerger entity and 60% is to be held by the ITC shareholders. So obviously this is going to be discussed in the meeting on 14th of August, that now we have more exclusive details that are coming in, is that ITC, this 40-60% ratio, if everyone's wondering that, why ITC is holding only 40%, one, obviously ITC is keeping that option open. They will be it's scouting for more strategic investors. That's the word what we are understanding. And obviously they want the hotel business to be independent entity, not depend on the ITC business going forward as well. So as in terms of the cash flow also, they don't want to depend on overall ITC's cash flow, the other business, the main business, which is the cigarette business or the FMCG business. They do not want to depend on that. So the demerged entity, the hotel business, they will be scouting for strategic investors over there as well. And obviously that is to look at, they will be looking at that when they see a right price coming in. That's a possibility. That's an open case there, that they could be looking for the strategic investor. And obviously that 40% is what ITC will be holding, 60% is what the shareholders will be holding, giving them an opportunity in terms of a strategic investor at the right price is what they could look at.
Okay, so that's the take coming in. ITC, of course, we'll get more details on August 14th, wherein the board meet will come up with more, information on that with respect to the ratio, etc., shareholding patterns, etc. But for now, what we understand is they're scouting for strategic investor as well. So let's wait by and see how that story develops. But the story hasn't developed very well for the markets today, because we are ending close to the lowest point of the trading session and the Sensex too down about 320 points. Naresh, wanted your sense. Do you think there is something structurally which has changed in the market? Or do you think this is just because of Reliance and Kotak? That's the bulk of the selling pressure today.
So that's been the case one by one. We have seen different rotations. Sometimes it has been IT which has taken the markets down. Sometimes it is banks which have taken the markets up. So we are still in this band. So for now, the viewers, we consolidate. We'll see this moves. One day one sector pulls up, one day other sector pulls up, something goes down. But we are bound to stick in this range for some days at least, between 19,500 to 20,000.
That's the take coming in as far as how the market texture is panning out. But quickly, let's take the BTSC trades as well, because we're just towards the last 2 minutes of trading session. Kunal, quickly, rapid fire BTSC.
Hero MotoCorp buy 3250 target, stop loss 3080. Balrampur Chini buy target 414, stop loss 398.
That was really a rapid fire, but sugar stocks have been doing quite well as well. What about you, Naresh?
NTPC buy with a stop loss at 194, target at 202. Buy on Hero MotoCorp, stop loss at 3120, target at 3200.
Gentlemen, on that note, we'll let you go. Mayuresh, Naresh, as well as Kunal, thank you so much for making time and speaking with us. But for the day, it was news flow that we had to deal with, Aisha, right from